So guys, we will just start our weekly session, and let's let's find out more about ADRs and what ADR does, where it is the best time to enter on ADRs. Let's look at like crude oil, the technical perspective, not the fundamental perspective, but the technical. Let's see. So if you check last week on the 24th, crude oil touched the ADR high and tried to cross it and move up, but failed. It means its momentum is downward. Then it tested the ADR low and could not hold, and then it was a key level actually. Okay, so the key level is levels, as I told you guys, is very important, and from the key level the market would always react. So if you see here, this is kind M formation. Where you enter at the retest at the second leg. That's what I always tell you guys. So this is the missing, from here it miss. You can enter here as well. So this is M formation. Where you enter at the retest when it there is a green candle. You see, I will zoom in. This is pretty funny. So I will zoom in here. So here is that retrace, okay? The retest of this breaking of this level here. This is the level. It came down and retested this, and then the new candle. 15 minutes is only to get the optimal entry. So you enter here, and I will show you how you'll select the short stop loss. So you will enter here, and your stop loss will be on here. It will be a very tight stop loss. Just I tell you this. And then your take profit will be ADR low. That's all. So what is risk to reward ratio? 1:3. So you're risking, for example, $100. You're making $300. And this is what is happening. Vester is also there. So welcome, Vester. You are a bit late. So this is what is happening. Okay. Now, if you go back here as well, though, you know why there was less momentum here? Momentum is very less here because it did not touch the ADR high. But again, the same thing is happening here. You see, it's tried to rise above the ADR high and made this some kind of M formation here. And then the second leg, it retested with this green candle and then again failed. It retested this level twice, then again, made some kind of head and shoulder pattern. And from this neckline, it just fell, And if you check what will be how you will place the take profit and stop loss here. You will take your entry would be here when this will fail, here, and break and retest here, this side. So your stop loss will be, and your take profit is here. Mostly when it makes an head and shoulder formation, it's a good sell. So here the risk to reward ratio is not very high. But if you put a stop loss here, then it will be good, 2.74. Mostly it will not go up again, I've never seen like that. So this is how it can be done. And then the trade on Friday, as you see, another M formation. This is M formation. And as I told you, where I entered, kind of M formation. Here is the entry. This is the retest, and this is the entry, and here I took off. So now let's look at gold. As I told you guys, gold. Yeah, exact ADR move. So once I told you at that time, since it was the end of the week, end of the month, so most of the banks make the payments and the liquidity flows into dollar. So DXY always becomes strong on the last day of the month, of the weekend of the month. Okay, so it was the last kind of Friday of the month. So liquidity flew in this one, DXY. So it makes an M formation, then a retest, okay, and fails. And where you enter, I was not there at the I did not took this trade. So you enter after it fails, and your target is ADR low. Your stop loss is here, ADR high. Okay, so you can put it here as well. Okay, yeah, ADR high is fine. So your stop loss and take profit, your trade is, if you risk like $10, you will be getting $20.3. Okay, $39. So it's, if you are risking $100, you'll getting $200. And as soon as it touched the ADR low, it sprang back up. Why? What is the reason? You know, let's find out the reason of it going up. So yeah, I will make so here, this is DXY. I will make it red. You know, this one, let's make it red, and let's make this one style. Yeah. It's kind of very, yeah. I will close this. So it's kind of you know, yeah. So what happened? Why gold fell? This is the DXY made a W, as you know, and gold made an M. In totally inverse, it went up, made a higher high, made a head and shoulder, and fell down. It made a V formation on the low of ADR. Gold is blue. So as soon as DXY lost strength and started coming down, gold went up, and because its pressure was over, again a W formation. So gold started falling again, and then again a bit of, because you know, even DXY has the ADR. We can check it right now. And when ADR is reached, no need to trade, because it you know, it will not be a high probability trade. And that's what I always say. Always take high probability trades. So let's check ADR. Where is the, yeah, this is ADR. So this was DXY. I will change this to candles, 1 hour. Yeah. So this is DXY on Friday. It made on the previous, on Wednesday, it made a W formation on the ADR low, went up, did not stop, because on weekend, you know, banks were planning to payments, and this is what happened. It bounced from the key level and started moving up to the next key level, but this is a resistance level. If you check, I have my level here as well. So from the pivot point, you can use this indicator as well if you want. From the pivot point, it bounced up, and there is a resistance resistance level R1 that it could not cross, and there is a key level as well. But on Monday or the next week, coming week, you know, that is going to come, it will gain strength, because now it will retest this level again and try to within the week, just like it did this, it will do this here as well, but it will make a W formation again. Okay, not be because W formation or M formation will confirm you a high probability trade, also ADR high and ADR low. So if you take these two things in consideration, you will not be losing trades. You know, if you don't see all the confirmations together, don't trade. Or if you still want to trade, reduce your trade size. You know, what I do, if I still want to trade, I reduce my risk to 0.5%. So so this is what happened in DXY, and it affects everything, and it affected GBUSD as well. You know, this is my GBUSD trade. It was ADR high. Okay, on Friday it touched the ADR high, could not cross, and let me show you how I found out that it's going down. and then it made a kind of M formation, something like that. But here it was a confirmation that it is not able to cross this level. This was a pivot level. Pivot level is the level from where the price either bounces or goes down, you know. So it could not hold this pivot level, and that confirmed me. And my stop loss was here on ADR high, only 17 pips stop loss, and take profit was. I wanted to make it until down here until the ADR low, but since the market was closing and there was very less pressure, you know, volume, so I closed my trade here on support to a kind of support too. So I could have taken this trade till here, 1 second, till the ADR low, and it would still hit the, and now again it's making an M formation, you know. So if I had taken it until the ADR low, it was 113 pips, but whatever I took, I told you guys. So that's it. And let's say let's have a look at USD CAD. What is someone is messaging? I did not mute myself. Everyone can hear me? Yuri, Gabriel. Hello.
Yes, I hear you perfectly.
Vester cannot hear me somehow. But anyhow, you know, you can watch the video, not unless the problem is on my side. Yeah, it might be some problem on your side, brother. So yeah. So USD CAD. Here are the key levels on USD CAD. I will ignore the pivot points, and this is the, you see, this is a key level. I told you guys this will be a key level from where the price kept on ranging. Why? Because of the oil price. And as soon as on the weekend oil bound, you know, pulled back, USD CAD pressure was released, and DXY plus the oil pullback helped it to bounce. But always remember, it will always follow market structure. W formation up, and this is the retest on the second leg. It retested, and then it went up. And what will be your, you will enter here, for example. Oh, sorry. I will finish this as well. How you will trade this? I did not trade this, but I'm telling you, if you want to trade, how you will trade this. You are doing like this, and yeah. And what mostly I do, I take the ADR high, but in that case, when the market is reversing, showing signs of exhaustion, you can take your trade out. So this, I will put my stop loss around here. So the stop loss here on this trade would be 18 pips, and the take profit will be 54 pips. It is a 2.87, 1 ratio, almost 3 trade. So I hope that satisfies you. And you see, it was ADR high and it missed it. And if you go back in history as well, this was ADR low. What it did again, why we are using 15 minutes? Just for the confirmation of the formation. And you need to check higher time frame as well for the confirmation of direction. So this was the key level, made a W formation, high retest, and then it just goes up. What, and if you had taken that trade, you know, I don't trade each pair, each and every pair, because then my account will be over leveraged, you know. So this is the trade, ADR high. Okay. This is my stop loss. So 20 pip stop loss, 99 pips take profit. How good is it? You know, bad or good? You can tell me. So, so your risk is only like $20, and your reward is multiplied. You know, if you are risking only one, your risk to reward ratio is 1:4.75. It is almost 5. So you risk $1 and you get $4.75. So you risk $100, your reward will be $475. But you would need patience, because market will do its thing. You know, there's a lot of chop here. You know, it's just not directly straight. So what I am seeing, I will just delete this. So market will do its chopping thing, you know. It will not move. It will always move in waves. It will not move straight. These are, but you can see my overall USD CAD trade. You know why I say historical trades, you know, this will be a historical trade. You know, why, where is my, oh, this got deleted. Okay. So if you see, if someone had taken, you know, even if you want to take, you can, if it comes back to this level, you can take the trade again. But remember to put stop loss here, you know, this is the stop loss. So if you have, you know, that is the reason I ask you guys to always take optimal entries, you know. This is the optimal entry where the buy blocks is there from the bank, and this was the gap, you know. And even on this, they make a W formation on the key level, you know, where the gap was there and goes up, then makes an M and comes down and retests it several times. Now it's going up. And I'm hopeful that it will go and test this level 137,500 easily next week. It will come like here, 1.38 as well. And then again, retest this level, and it will always keep retesting the same level it has broken at least 2 or 3 times and then goes up. So sooner than later, if someone, for example, has, if you calculate, for example, on this trade, if you are able to catch this trade here again, if this comes back to this level, it will be very amazing, you know. Long position from here. 1 second, guys. I've got a call. So yeah, if you take this trade, for example, and if you like to hold, let me share with you what will be the prospect of this trade. Okay. Okay, the risk, for example, if you put, this is around how many ratio is this, risk to reward, and I want to calculate the pips. It is saying here is 3,001, yeah, 3,100, 31,245. What is this? It's not showing correct risk to reward ratio. Okay, 80 pips. No, 80, not 80 pips. This is stop loss. So 50 pips stop loss, and this is the result. Yeah, 49504, 22, 1 to 22 risk to reward. So 49504 is, let's calculate. And if you take USD CAD, always calculate your position size. For example, if you take only 0.5. So if you check, this is the result. My God. So it is like this, but I don't think so. It is 3,000, is maybe 1,300, but why it's not showing the correct pips? I don't know, but it is showing 50 here. Where is the here quantity 4,900? I don't know what is the reason, but yeah, it would tend here. Yeah, 1,126 pips. Sorry. So this is the 1,126 pips. So your result will be on 0.10, it will be $847, and your risk is 50 pips. So $37 risk and reward is around 837. So it's very good, you know, it's not bad. This is the kind of trades you should, and this is called a swing trade. It will take months or weeks, at least a month, you know, to reach, or sometimes 2 or 3 months. You just need to be very patient. Or you can do is you can put 0.20 and close one in the middle somewhere and the rest to run. That's what I do. So this is one trade you can take. If the level comes back to here, then you can do, and it makes a W and retests it, then you can go. But otherwise it will go here on this level here. So let's, anyone wants me to check any pair? You can tell me, guys. You can check.
Euro dollar maybe.
Euro dollar, Euro USD. What I would suggest all of you to, you know, just focus on one or two pair. Now this is Euro USD trade. Oh my God. Yeah. Perfect. Perfect trade. Never mind. It was good. So Euro USD dollar is right now on a sideways formation, is a bearish, but what it's, you know, when it will be tradable, either when it's on the top of the ADR or the low of the ADR close to the key level, and we'll see how it will react. Last time it made a W and went up. I always, it will make a formation for confirmation. So right now it's not tradable. It will do choppy movement, make spikes and take your stop loss out. So in the low probability trades, you should never take. So we will see what it does here at this level. Either it has to go up, make an M formation on the ADR high, we enter and we take ADR low, take profit, okay? Or it has to come down here somewhere and makes a W formation, retest this level and goes up, and then we close a trade here, something like that. So you already know how you will react. You will not take trades in the middle. If you will take trades in the middle, you will be taken out, okay? And it's always good to be a scalper, but scalper, you will lose, you will have a bigger stop. Why we don't take trades in the middle of a range? Just to avoid a bigger stop loss. So risk to reward ratio will be nothing. For example, if on Monday you want to take long position here, okay, so this is the range, you know. So the risk is 44 and the profit is 66. It is not a good risk to reward ratio, so you should not take this trade. And if you want to take a short position from here, this will be, you know, it might bounce until here. This is the neckline of the kind of the initial. So it is a $61 stop loss and only $46 46 pips profit. So also not recommended. So what you do is you let it move to some key level, you know, either here or either here. Then you will see on what level of ADR it is. Then you will take trade. And from the history, it is proven, you know, how it moves. I will close. I will, you know, see. 1 second. I will delete. Okay, whatever. So if you see in history, in the middle, it is just ranging. Don't trade. This is not a trade. You know, I would never take this trade. Either it has to touch the lower. It has to show a formation for a buy or a formation for a sell. And for example, here as well, it wanted to cross. It touched ADR high, then made an M formation, and then it retested here. I entered right on its neck, and it is a nice pull down. You know, it might come and retest here, most probably, but depends on DXY. You know, so and ADR high or ADR. So any other questions on this?
All right. Are you saying this one we should look for uptrend the coming week?
Trend we will see on Monday. You know, we cannot predict how it will may either touch here or touch here. It all depends on the market situation. That will be on Monday. So if there is a bad news, political bad news, so DXY will become strong because it's a safe haven, then Euro USD will fall for sure. When DXY fails, you can buy Euro USD, but you need to see at which level it is. is it at a key level or not? And is it at a ADR low? Then it will be a high probability trade. ADR low, key level, and DXY weakness. It's a buy on Euro USDC. So we can, we can even check what happened here. We can add. I will close this, all of this. I'll make this just to show you guys, so you understand this a lot better. I will just setting. Yeah. So this is red line is DXY. And okay, the red line is DXY. And let's see, let us go on the 15-minute chart. You see, this is a buy, okay, the W. What happened was DXY fell, then it kept going up, it kept falling, the Euro USD kept going up. As soon as DXY made a pump higher, it went down. It is, it will mirror the action of DXY. If you see, it will not move here and there. So DXY made an M formation and went down, weak. Euro USD make a W and went up. So it just keeps happening every week if you pay attention. So never take shitty trades like that is not on ADR low, or for example, if DXY is strong, it's a weekend and you are taking Euro USD buy, unless and until there is a huge news against US dollar, that US dollar has gone bankrupt or something. That is not going to happen very soon. And yeah, so you understand this.
Well, so guys, I might just joined you late, so I was just asking if you did check Nasdaq.
Oh, NASDAQ, our favorite. I told you guys, NASDAQ always follows ADR. Look at what happened over the weekend. It tried to breach the ADR high. It was the weekend. Made kind of M formation and retest, okay, and then a sell-off. And if you had taken this trade, this is kind of 193 points you will gain on this sell-off. Okay, so just wait for the ADR high or ADR low. That is more easy technically, and then you can ask me as well what it's going to. But for NASDAQ, you need to watch out fundamentals. Equities bleed when there is risk of, so there was a risk of information because of geopolitical events. That's why there was a sell-off, and it is also considered a pullback. So if you go back as well, it will do the same thing. 20 days. Here is another sell-off, retest of ADR high and sells off to the ADR low. Okay, so it is easy to catch when it hits ADR low, it goes to ADR high. That is simple as it. If it's in the middle of the range like this, don't trade. It's not tradable. You understand my point? It's just technical, this is technical trading, not the price action, you can say. So this is the trend line, makes a W formation, goes up, makes an M formation, goes down, goes up, makes an M formation, comes down. Yes, that's kind of it, and mostly and one more thing is there. Here is the liquidity by the buy orders. These wicks are formed because of the buy orders, big buy orders. So they are pushed. Even when it reaches the ADR low, it has to push up most of the time, and it is 123 points as well. Another, if you do trade both ways, then it makes an M formation, comes down, retest this level. I don't think so. It will. It might come to this level again, 9738, and makes a W formation on the ADR low and goes up next week. Okay.
Looking on the daily time frame, I was thinking it will go down just to test the lowest low point.
Yeah, let us see. The daily, it might come to, yeah, it might come to 97 here, this level.
Yeah.
And after that, because it will always give it will always respect the daily resistance and support levels. So let's look at the support. What are the support here? So the R1 was support here, and next pivot level is coming here. Let me see, where is the, this is R1. Where is oh yeah, the pivot level is at the 9282, and if it does not hold, then it's going down. You know, 92, remember 9282 is the pivot level, kind of this. So I don't think so it will happen, because there is more stimulus coming from the US. Fundamental reason, it will go into a buy. Right now what happened here is that people secured their profits, and here as well people secured their profits here, and it was a good fall, and then went back again.
Well, I always wanted to ask, like, why do you usually check this news for NASDAQ
News?
fundamentals? Like, yeah,
You check news? Yeah, I check news all the time for NASDAQ.
yeah, or under fund or NASDAQ, because like we all know that NASDAQ is driven by top 10 most, top 10 what countries businesses in US. So I don't know where to check them, or I can check them on investing app or what.
No,
I don't
you
know
know,
what to know.
you can register to a Squawk service. You can check, this one is good, that I use, Forex Source. Okay, it is around $100 a month these days, so you can check this one. They are good guys. Okay, so they will give all the information, whatever is happening, like a radio station. You know, they'll bring all the fundamental news. But the main thing is, it will take some time for you to get familiar with the fundamental news, how it affects, you know. So it will take some time, but you can subscribe here if you want, you know,
No
for
problem.
fundamental news. It's around $100 a month. And for me, I would like to look at Bloomsburg as well. That's another paid service, Bloomsburg Terminal. So I won't I won't suggest you register to Bloomsburg, because it's very costly. So yeah, here it is. But the formations on the chart will really tell you the story. Always remember, the price action on the chart, they are depiction of what is happening on the background. You know, why if a price is failing from some key level, then it means it's going down, and it will retest another key level. Or it goes up, it will check the key level up, that is now a resistance level. So it is, you know, it has to make formation W or M to come down or go up. If you see like 1 hour chart, you see, and 1 hour chart, what is this? A strong multi-session W formation, you know, it goes up, another W goes up, and M, and then another M. This is 1 hour chart. You understand? So formations will be always there. Don't trade without formations and price action structure. You know, fundamental news is there, but they will always, you know, because they know how the other retail traders are trading. So you need to follow the market structure, fundamental news, and ADR key levels. If you take all of these things together, you will not be failing anytime. You know. So I have shared with you guys how it happens most of the times. GBP, JPY, and GBP. There is only 1 minute left, but I will be very quick on this one. GBP, JPY is my favorite. GBP, JPY, GBP, JPY will retest this level and come back to this level, or it will go down and retest this level. There is only 2 things that can happen. Right now, it's going to retest this level and might make a W formation and go up, and make some induction, and then make another M formation and come down. Mostly it's bearish in my eyes. and GBPUSD. GBPUSD is the same. It has just breached the key level. It might go one time more and retest, make an M formation and come down. Okay, that's what is, because fundamentally GBP is weak. And but always make sure that you are following formations. You know, you're not doing without formations and key levels. This fell from key level. Just remember this. It could not hold this level, made an M formation, retested, and here you enter and came down. Yeah, now the